if you are into pairs trading, or you are thinking about getting into pairs trading, there is something I really want to discuss with you, and this is very important, guys, right? And it is probably what you don't know, right? Or maybe what you think you know and you don't know it fully well, right? And that thing is the habit of mistaking correlation for cointegration. So I've been discussing about correlation, cointegration in the class, right? And I believe this will also be as, or this video will also serve as another explanation to what I have been discussing in the class. You know, most retail traders, right? Most best traders, they open the chart, right? Once they open the chart, they see two currency market or two crypto markets moving in parallel, right? And they think, right? They think when they separate, right? They think when these two assets that are moving in the same direction separate, right? That they are going to buy one and they are going to sell one, right? And make profit. But that is not even the problem, right? That is not the problem with that, because that is what we do as pairs trader. We wait for pairs that we have qualified to be our pairs, and we wait for them to open up, and we are taking a buy and a sell position, right? But the problem is that most people, or most retail beginners, pairs trader, right, they mistake correlation for cointegration. Right now, in this video, I'm going to be showing you why simple correlation is a trap, right? And how professionals, right, how they actually do pairs trading with correlation, right? So I'll be explaining this with an example or illustration, like I always do, right? So let's imagine, or let's assume, okay, let's say we have two drunk men, right? Okay, let's say imagine a bar, right? Just imagine a bar at midnight, let's say 2 a.m. at midnight, and we have two drunk men, right? They are drunk. They've been drinking probably from afternoon till 2 a.m. They are drunk. They've taken a lot of beers, a lot of alcohol, and they are drunk, right? And the first time they get up to walk to their home, both of them stood up at the same time, and the first block, when they get to the first block or the first door, they happen to walk in the same exact direction, right? Because both of them know the door while they exit. They walk to the exact direction and at the same speed, right? Yes, because they are drunk. That example is correlation, right? They are drunk, they are moving in the same direction, they are going to the same direction, which is the door, the exit, right? And let's say both of them are friends, right? They now decide to, okay, we are done drinking, let's go home. And both of them stood up and they started going, right? They are staggering, now how drunk men or women, how they move, right? And they are exiting at a particular door, right? So they are heading to a particular exit. So I hope you get it. Now they look when they are moving, they look synchronized, but they have no actual ties at all, right? Because they are controlled. Yes, they are controlled by the same influence, which is alcohol, and they are drunk, but they don't have any ties. So at their next intersection, you notice that they will wander north, they will go south, and but if if, for example, we now bet, right? We now bet on their, we bet our money that they are going to move together. We are just going to lose our money, right? We can't bet on two drunk people that once they are leaving the bar, they are going to go home straight. We cannot bet on that, because we know that anything can happen on the way. One of them can fall and enter the gutter. One of them can go to another bar. Anything can happen. So we cannot bet on that relationship, right? So you understand now, right? Now let's take another example. Let's imagine another scenario where a drunk, right? A drunkard is also moving or walking his a little puppy, his dog, right, through on a leash. So you agree with me that dogs are wild, right? They move, they wander around, they will run there and there, they will come back to their owner. So sometimes even dogs, they will run away, they will run ahead, far ahead. Some of them will even go home and come back to meet their owner where they met them or along the way. So the dog part, right? What you need to notice is that the dog's part looks chaotic, like it's moving randomly, wandering around, going back and forth, east, west, north, south, looking for what to kill, looking for what to eat, and just keep playing. But because of that leash, right, the dog can never wander too far away from its owner. It can never walk away, right, too far, or the dog will always come back. That is the point here. The dog will always come back and meet its owner, right? Wherever the dog goes, wherever the owner goes, the dog must follow. And this is example of co-integration. This is co-integration, right? And I hope you understand this, right? The relationship between a dog and a drunk owner is co-integration, because the dog can go anywhere it wants to go, but it will always come back and meet its owner, right? But two drunk people can never they can never go to the same direction for a very long time. They will wonder, one of them will go to separate ways, unless when they are done, when they are sober, they can now come back. If that means that is the following day, right? So I just want you guys to understand this. It's very, very important. So let's come back now. In the stock market, right, or in the crypto market, correlation, right? Correlation just means two assets moving in the same direction by coincidence, right? But co-integration, on the other hand, just like we saw, or just like in the example, their prices or co-integrated asset prices are bounded by a mathematical leash, right? So let's take, for example, this chart you are seeing, this chart of Coca-Cola and Pepsi, right? This is Coca-Cola and this is Pepsi. This is the chart of Coca-Cola and Pepsi, and I'm using the daily time frame. You can see that the market, yes, the shares, that if the price of Pepsi, right, this Pepsi here, temporarily shoot up, right, ahead of Coca-Cola, right, as you can see, the price has shoot up ahead of Coca-Cola. So let's bring in the analogy I gave before. This is an example of the dog, right? The dog has run away, right, shoot up away from its owner. So in this case, the owner is the cook, right? So dog is Pepsi, right? Dog is Pepsi, why Coke is the owner. So I hope you are getting what I'm trying to tell you, or what I'm trying to explain, right? So with these examples, you will fully understand what I am discussing in this channel, because I don't want to just start pushing the button without you understanding what I am doing. So it will not be as if I'm doing magic, right? It's not magic, right? So as best traders, right, we don't just guess the market direction. We don't guess the market direction. We trade the leech. We trade the leech, right? We short the Pepsi and buy the Coke, right? We short Pepsi and buy the Coke. Why? Because the math behind it proves that gaps must snap back to the average, right? In this case, the dog, right? The dog must always come back to its owner, right? Even if the dog has wandered very far away from the owner, it will always come back, because that relationship, the relationship between the dog and the owner is cointegration, right? It will always snap back, right? So when it does snap back, when it does we call it converge, right? We call it converge. When it does snap back, we then take our profit, right? That is when we make profit. We trade when they wondered, when the dog has gone away, far away from its owner, because we are betting on that relationship, that whatever happens, it's either the owner, right, move quickly to catch up with the dog, or the dog come back to the owner. So either of the two, either of the situation will happen, right? And we can bet our money on that they will always come back together. But we can't trust that relationship between the two drunk, right? We can't trust it. The relationship between them is correlation. You need to understand that. Now, I want to give you a golden rule as we close this video. There's a golden rule, and that is, stop trading drunks. Stop trading the drunks. Start trading the leech. Make sure that your your pairs, your crypto, your assets that you are trading are they are mathematically backed and tethered before you take or you risk any dollar, right? Before you risk any single dollar. So I hope you understand this example. I don't want this video to be too long, right? So I'll be stopping it. So if you understand anything here, you can give a like and share your comment, and also make sure that if you have not yet subscribed, do well to subscribe. And I will be seeing you in the next one. Until then, bye.